Okay, what is going on, CYPRX YouTubers? Welcome back to another CYPRX YouTube video breakdown. In today's video breakdown, we're going to go over some XRP technical analysis, so make sure that you stick around. If you're not subscribed to the YouTube channel, please go ahead and consider subscribing. Smash that like button. It does help boost the YouTube algorithm. Really do appreciate the love and the support. 4,000 YouTube subscriber, guys. I cannot be thankful enough. Just a quick announcement. I know that I've been flashing the Instagram on this YouTube channel a lot, guys. Guys and girls, excuse me. I'm completely done with Instagram. All right. As of April 1st, I'm going to be deleting the Instagram channel. I've had 3 fake accounts get created over the past couple of days, and I'm just sick and tired of it. Okay. It's just disgusting that people, have it out to, instead of being, successful themselves, they have to copy other people's hard work. It's just disgusting. So I'm just going to get off social media, and YouTube is going to be the only stream of, internet content that I provide. Okay. So just a little, announcement real fast. I thought that I'd let you guys know as of April 1st, we're going to be deleting both Instagrams. So, the customer support email, the website, cyprx.teachable.com, and, the YouTube channel are going to be the only means of contact. If any of you guys have any questions for me regarding the mentorship, you guys are more than welcome to email the customer support email down in the link in the description down below. All right. Blessings to you guys all. Really do appreciate the love and the support. Okay. So real quick, XRP technical analysis breakdown, beautiful run into around 85 cents. All right. Absolutely outstanding today during the New York session. How could you have caught the move, right? That's the question. Okay. If maybe you potentially missed out on a move down here in this area, maybe here, maybe even down here. How could you have caught a nice little intraday scalp position, which I love teaching, the technical analysis to the CYPRX students on how to catch moves like this, because this move down here could have yielded, all right, a nice, beautiful risk to reward ratio of around, let's just say 1 to 13, 1 to 14. All right. And this is what a lot of people are looking for in the market, especially those order block trading scenario traders. All right. Now, but utilizing the methodologies that I teach here on the YouTube channel and just showing you guys some specific things in the market, we already understand, if especially you've watched some of my previous YouTube videos. And if you haven't, I highly suggest you go check those out. But we know that the bank and institutions piggyback off of each other, and that they purchase at previous areas where the bank and institutions or private investors purchased from the previous day. So I have highlighted here for you guys a significant area. We know that if we're looking to purchase, especially in the previous video, this whole entire area, we could see that New York session took and chose a specific area, a specific psychological level, which was the 75-cent range. And I covered that again in the previous video, where if we were looking to hold above this level, we were going to most likely have a climb in price. And that was mainly because we could see that overall the bank and institutions, again, the private investors, found this level significant enough to be purchasing price from. Okay. So look at this. Again, this is the 75-cent range. I'll round that off to you guys. And I've been telling you guys for quite some time that if we hold this level, we are going to see a bullish run back into these highs. Okay. And as you guys can see, we got that. Where did the bank and institutions, private investors purchase from? They purchased there, purchased there, purchased there, made a run on liquidity, created a higher low, and then we rallied higher. Again, that significant psychological level that I told you guys to be mindful of held very nicely. All right. So now in this area, coming into this New York session, you could have paid attention to 2 things. Okay. We know that if we're going to be trading this New York session, we're going to analyze the 2 previous New York sessions and what happened in between. All right. So in doing that, all right, pretty much what we're going to highlight is that this bank and institution for New York session or private investing entity purchased from this psychological level, and we'll just round that off to 81275. If you're trading cryptocurrencies like Bitcoin, Ethereum, XRP, anything based up against the United States dollar, you're going to be looking at the quarter theory for psychological levels. Okay, so we see here this is a significant psychological level, 81275, where the bank and institutions purchased from. Now, this same psychological level, 81275, we'll just go ahead and we'll mark that off. Okay, boom. We can see here that the next trading day, the bank and institutions found that to be a premium and took sell positions. Okay, now they took sell positions, and where did they push price down into? Would you look at that? They pushed price down into where they purchased from the previous day, or where they added to their order the previous session. Okay, as you guys can see, they put in an order here, collectively speaking, all in this range. And again, they put in another institutional order that moved price back before New York session closed to the upside. Okay, so coming into this New York session, we have some significant levels that we could have extended over, where we can see the bank and institutions from New York are interested in purchasing price from. Okay, so utilizing these boxes, we can then zoom into the fractal nature of things. And again, this is on the 15-minute chart, all right, where if we're doing our higher time frame analysis as scalpers and intraday traders, we're going to be looking to do it on the hourly to the 15-minute chart. Coming over here, we can then zoom down into the 5-minute to get into the nitty-gritty of what happened in price action to capitalize on this move during the London session if we want to go higher in price. Okay, so check this out. Coming into this New York session, look at what price action did. It's so simplistic and easy to see. Now, again, that's to say the least, because a lot of people will be like, oh, well, how can you see it in the live markets? It's called being patient and sitting on your hands and understanding logic in the market. That's how. Everybody that's like, oh, you hindsight back test and da 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 da. Yes, that is how you teach yourself to see these patterns properly in the market. Then in the live market, what you have to do as a trader is sit on your hands and wait until you see these patterns play out. Okay, you're not looking for support resistance. You're not looking for order blocks. You're not looking for Wyckovian theory or none of that. You're looking for logic in the market, liquidity, what the bank and institutions are doing, what they're most likely going to do based off of current price information. Okay, so logic heading into this New York session, we already have this blue highlighted area where we know this was a discounted range from a previous New York session, 81275. All right, so we can just go ahead and we can kind of, I guess you could say, highlight this psychological level to give a more so smaller target region, as to say, okay, if price holds above this range where we can see the price bought from the previous day, most likely we're going to have a bullish rally, right? Why? Because we know that if previous day bank and institutions, private investors purchase from this range, this is going to be a significant area where if they hold above this range again, they're going to be looking to buy from. Okay, so coming into this New York session, knowing all that, digesting all of that information, this is leading up to the day, right? Because again, you could have had all that information, right? People will be like, oh, hindsight testing is crap. Is it really? Because guess what? If we were actually trading this New York session, we would have had all of this price action to analyze. So is it really crap? It's not. People that make excuses for themselves in the market as to why they can't become profitable will say that hindsight testing is crap. But guess what? Hindsight testing every single day, 8 hours a day for almost 2 years straight is what made me a profitable trader. And controlling my psychological warfare that was going on in the market when I realized I was over trading and over leveraging and blah, 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 blah. Okay. But anyways, that's another video for itself. But we can see here the market respected that psychological level to the T and shot off. Again, this blue highlighted areas was where we rounded off the psychological level purchase from the previous day. You know, and just utilizing the methodologies that I teach here on the YouTube channel, we can see liquidity grab, significant higher low, rally higher. So again, to confirm that this was the significant psychological level, we can even see the pattern that I teach you guys on the YouTube channel that plays out right here in this area at 81275, where we can see the market grab liquidity beneath this low. Boom. Created a higher high. Fractally, there was probably a whole bunch of gaps and imbalance in this candlestick on the lower time frame, maybe the 30-second to 1 minute chart. We see the market create a high or give a bullish response to this psychological level, create a higher low after the liquidity grab, and start to create higher highs, higher lows for itself. Again, where we can see the bank and institutions, private investors purchase from. Moving on. Okay, again, it's hilarious. People that don't hindsight test will say, oh, well, all you do is hindsight test. Well, guess what? We would have been able to analyze all of that prior to this New York session. Now, I didn't trade this New York session. I'm not going to sit here and cap like I did. I've been in buy positions all the way down here below the 62 and 55 cent range. My positions are still floating. And again, any YouTube videos that you haven't watched breaking down those price action videos, go ahead and check them out. It's valuable information for you as a trader to capitalize on how to enter into the market properly. So now coming into this London session, what could we have seen? We can see that the market just most recently created a low and created a high. Now this low was higher than previous higher lows. So we have to assume that the market is having a willingness to grab liquidity internally and rally higher. Grab liquidity internally and rally higher. Grab liquidity internally and rally higher. All right, so now we're operating inside of a new A to B move. All right, so now we can get rid of this entire analysis. Moving into this New York session, again, hindsight testing, you would have been able to accumulate all of this information. Okay, so now that we have all of this information, let me answer the question. Well, how do you apply this to the charts and how do you actually trade? You use logic and you wait. Based off the things that I teach you now on the CYPRX YouTube, what can we see here? Prior to New York session, we see early sellers in this area. Funny, isn't it, how it's all kind of playing out? And we also see prior to 8:30 a.m., which is a specific area of time that I've been fortunate enough to give you guys, so that way it dials down your trading analysis. That's the goal in trading, is to get as, I guess you could say, as accurate as possible, like a sniper, right? What are the banking institutions doing? We already know that the banking institutions are purchasing at specific times in the market in that specific area. So if we, as traders, want to capitalize on big market moves, we know that we have to trade just like that, not just randomly in the market. Remember, nothing in this market is random, all right? So prior to 8:30 a.m., again, just drawing that box off, because I've been dropping gems on this YouTube channel. I'm tired of all these just fake gurus. We're about to get stuff cracking in this market, okay? No order block theory, because look, the order block down here got missed. All right, so we're not looking at order blocks, because if you were an order block trader, most likely you would have had this area marked off. You'd have been looking for some price reaction into this region, and then you would have been looking to take buys from this low, okay? Wrong. No, don't do that, because half the time the market doesn't even respect order blocks or the right order block that you have marked off on your chart, okay? Now we know that we're operating inside of this A to B move. Let's talk about logic, okay? Logically, we know that we are in a uptrending market. Logically, we also know that if the market is going to reverse, we need to break what low? What low do we need to break? And guess what? We had this price information going into this New York session. Again, this is how you're building confluence. What low would we have needed to break? This low here, okay? So we know now a couple of different things. We're trending up. We know that in order to go bearish or reverse our mindset from bullish to bearish, we need to break this low. We also know that at any given point in time, the market could react to discount and purchase price again at these lows, because this is where the banking institutions for London purchase price from. And we have a significant blue line where the banking institutions purchased from the previous day, New York session, which is an even more significant level of interest. Okay, man, I'm blowing y'all's minds right now. Okay, so again, based off of logic, we don't buy high, okay? Capitalizing on the simple phrase, buy low, sell high, right? You want to buy low and you want to sell high. Buy low, sell high, okay? Utilizing this methodology, where are we operating at in price? Well, would you look at that? We're operating at a high. Why would you buy from this area? So now if we know that we're trading this New York session with all the information that we've accumulated this far just by breaking down price action, right? Let's just say we don't know what's going to happen. But what we can identify in the market is that we are currently operating at a new swing high that broke previous market structure, and we've created market structure, higher lows that we could be looking to purchase from or get into the move to get a proper risk to reward, right? Well, just taking your Fibonacci, let's just say, again, hypothetically speaking, from this low to this high, because we don't know what price action is going to do over here. If you just pay attention to what it is that I teach you guys on the YouTube channel, the banking institutions like to purchase from 62 to 70 to 79% discount. You know, whatever your risk to reward ratio is, you're going to have to decipher that at that current given moment in time. Where if price doesn't come down to the 79% discount, you can't cry about that, because maybe it only comes down to 62% and you weren't willing to take the buy from there and price rallies without you. That's where FOMO comes in, and you can't look to chase the market at that point. You have to sit on your hands and accept the fact that the market just didn't respect the discount that you wanted at that current moment in time. Not every single trade is going to be picture perfect. That's another reason why traders cannot trade this market profitably is because every single day they want a picture perfect trade. That's not realistic, okay? Your goal is to create a strategy to say to yourself, okay, if 62% is where I look to purchase from, then that's where I'm always going to look to purchase from. And even if price pushes down into 79% discount, I'm not going to get fearful and close here, because I know that because I purchased early at 62%, I could potentially see drawdown in my trade, okay? And then you're also going to say to yourself, well, okay, if I do take that 62% discount trade, right, all the time, and price only decides to respect 50% discount, right, and it stops here and goes, and I miss out on the entry because it didn't tap into my discounted area of interest, I'm not going to get emotionally distraught. You have to build all of that as a trader, all right? But now, again, just utilizing the methodologies that I taught you guys so far on this YouTube channel, okay? We're just paying attention to what the market has told us so far. For all those people that are like, oh, hindsight testing doesn't work. Yes, it does, okay? We know all of this about the market. So I would have said to you guys, if you were at my trading floor, well, we're at a high right now. If we come down into a discounted price, I'm going to be looking to add into a buy position to scalp this market, either to previous areas of resistance, quote unquote. Realistically speaking, it's just other areas of liquidity, or you can utilize your Fibonacci extension levels. And look at this. Price comes. Let's play it out. This is a beautiful risk to reward. Let's make that just a 70% extension. Okay, 100% extension would have been 1 to 3 because I only trade 1 to 3s here at CYPRX, and the majority of the traders know to only trade an executed trade when it offers a 1 to 3 risk to reward ratio minimum. Okay, so let's play this out. This is now a potential 1 to 3 risk to reward ratio just based off the Fibonacci extension. Let's zoom out and see if we can target any liquidity in this area over here. Yes, we can. Right above these highs. Okay, we know that there's over leveraged sell positions, and then there's also buy stops from people that are willing to buy above these highs if price ever surpasses this area, where order block traders are going to be looking to sell if the market comes back into this area at a premium. The banking institutions know all this stuff. They know order block traders exist in this area that are going to be looking to take leveraged sell positions. They know previous leveraged sell positions exist above these highs that are still floating, and they also know that people are going to be willing to buy price when it does surpass this level. Okay, so that's 3 areas of liquidity broken down for you guys. It's nuts, okay? So let's see if we can get a continuation, right? Let's play this out. Boom, so price has now entered us into the market. We saw a little bit of drawdown. We're still looking at the significant psychological level right here identified by the blue line. Okay, so that could have helped us in our trading as well, build confidence. Okay, because again, that's another thing that a lot of people fail at in this market is they fail to build confidence. Okay, what and how can you build yourself confidence in the market to not close your trade when you're in a little bit of drawdown? Maybe because you're a little scared because you see these black candlesticks, right? You have to fight all of those psychological psychological warfare that happens to you in the market. All right. You could have created an exit plan, which is something that I teach the CYPRX students to do, is create an exit plan where we've already identified that this is the low that we would need to break. We now also see a significant higher low in comparison to the previous one form outside of the manipulation window, right? We see here 8:30 a.m. ends. This is a higher low that ends outside of the manipulation window, and it leads to a break in structure. So now, yes, we are in an A to B move. Okay, but now analyzing every single thing that we've identified so far, we've identified this is a significant blue line level, or I'll just say blue line level, but the 81725 level, where the banking institutions purchased from the previous day. We've identified that there are what? Early sellers in this area, so there is a reason for the market to go higher and grab liquidity. So if we're entering in this area, we now have logic as to target areas where we could take profit from. Okay, again, we're building everything for our trade. Okay, now also we have a high created and a higher low created outside of the 8:30 a.m. window. So we can identify this as a fractal market break in structure where the market has showed us a willingness to go higher. We can now say to ourselves, we have 2 significant higher lows, okay, that the market has created a higher high, higher low, higher high formational pattern. If we're going to be looking to get in on the move, we can say to ourselves, as long as these lows hold, as long as these lows hold, these could be valid stop loss regions to take this position higher. And look at that. Look at the psychological level accuracy where, again, I teach the CYPRX students in advanced detail how to identify this stuff. You could have caught this move. Even if you didn't enter all in this area, all in this area, all in this area, maybe you were scared. Guess what? We have another fractal break in structure where the market creates a higher high, higher low formation, and we go. And that happens to be right at the point where the banking institutions and private investors purchased from at a psychological level the day before. I hope that I just blew your guys' minds. I'll put the fundamental breakdown in the next video. I didn't think I was going to go on that long, but man, let me tell you what, some of the people that have reached out to me and told me that this price action analysis and the way that I break down price is really helping them. I hope to see you guys on the mentorship. Again, that link is in the description down below. Only click on the links that are down in our description, which are the customer support at CYPRXtrading.com. We also have the CYPRX.teachable.com website. All Instagrams are vanishing as of April 1st. You're only going to be able to reach out to me through email. If you guys email me, I will respond within the first 24 to 48 hours. Blessings to you guys all. As always, be cognizant, be aware, take it easy. I'll see you guys in the next video breakdown.